And then when the markets don't move, they trade in different ways, and they just make money every day. Do they go home with flat positions every day? No. They're running multi-billion-dollar portfolios. They just let the portfolio work, and they let the money come in. And they don't stand in the way of it. Huge overnight risk. You can speak to Chris Cathy about it later at the pub. We used to run crazy numbers. A couple of $1 billion on the pan-European trading desk. We'd have between 200 and 400 million of that risk. And we'd run portfolios. And that was even back in the early 2000s. We weren't day trading. Just big portfolios that make money. So 2015, was that a fluke? Was that a one-off? You can actually go back all the way to 99. But let's go back a few years, see what happens. 2014. Thank you very much. What about 2013? What about 2012? That was a decent year. What about 2011? You can go all the way back to the late 90s, since they became a public company and started putting out these numbers publicly. It's the same every single year. Why? What percentage of retail traders lose money? What are they doing? Everything on the right-hand side of the chart we looked at earlier. What percentage of days do Goldman Sachs make money? 90. What are they doing? Everything on the left-hand side of the chart that we looked at earlier. It's not that difficult to work out if you know what you're looking for. So, shouldn't we be doing exactly what these guys do in our own trading accounts? And become the most annoying clients of retail brokers in the world? Guys who make money. Everything that you've got to do in your retail trading account needs to be the same way that these guys do it, on the left-hand side. So you have access to the platforms, it's necessary to use them, but you do everything in the opposite way to the way they want you to do things. And you learn how to do it properly. And there's no shortcuts. You've just got to do it. So right back to the beginning, be warned. Our campaign, continuously for the last 5 years, is to first educate you on how the industry works, so you don't make the stupid mistakes that everyone else makes. That's what you got today. The next stage is to educate you on how to actually make money. So how you actually emulate professional traders who are real professional traders, who have got the experience, been there, done it, and have made a lot of money and continue to make money. You've just got to go straight to the source. So you've got to be woke. And I hope this has woken you up. Because the reality is if you don't go down this path, you will go down the other path. And you will blow up. And we don't mind. We'll be around next year, the year after, year later. You'll just come back. But it'll cost you a lot of money to learn the lesson, if you haven't learned it already. I guarantee you there's people in this room that have learned it already. Most retail traders in the US lose $20,000, $30,000 before they decide trading is not for them. But they never get woke. They never find out the real reason. And the real reason is the stuff you've seen today. You've got to go straight to the source. So just don't waste years of your life. It's no skin off our nose if you do. We'll still be here. So here's our general website. We've got a new website, itpm.com. You can sign up for free seminars around the world, /seminars. If you want to go straight to the online education, go to itpm.com/education. We've got 2 programs. All the information's there online. We've got mentoring programs direct with our trading mentors, and all the guys are hired on very strict requirements. They have to have been professional traders for years and made significant money. And they have to prove it. Trading accounts, IB agreements, itpm.com, trading accounts. And if you've got any further questions, go to the FAQ section. Check all those questions. If you have any further questions, after you've seen the FAQs and the answers, send us a message through the website, through contact form. And we have 2 acronyms at the Institute, which I'll leave you with. GTFOH and DFIU. Get the fuck out of here and don't fuck it up. I'll see you at the pub. Okay, guys, welcome. I know the reason you're here. You've seen the video. Everyone who has not seen the video, 10 Secrets to Achieve Financial Success. One guy at the back. Can I ask why you're here? There's always one. So this video, the 10 Secrets, we filmed it a couple of years ago. And the brief was for Tom to just come over to Singapore for like 5-6 days before I went on a business trip. And the brief was pretty open. It was kind of like, okay, you represent a young guy from the UK, just come over and ask me anything. So it's kind of like an ask me anything format. And if we just film constantly for the next 3 weeks, I'm sure we'll get something useful, because you're basically the typical London guy, 22, 23 years old. And there's a whole bunch of questions that I'm sure everybody's always wanted to ask someone like me, which they either come in person and don't have the courage to ask, or they ask and they get a 2-minute answer and it's just not good enough. So we do make ourselves publicly available, but it's always very difficult. Later, if you've got the tickets to come to the pub, we'll probably won't have a conversation more than 2 minutes because there's just so many people. So we're publicly available all the time, but you generally don't get to spend a lot of time, asking questions that you really want to ask. So the whole idea behind it was film over 3 weeks, ask me anything. I think we got about 23, 24 hours of footage of just him asking me questions and talking. And it was edited down to 10. There was a lot more points. Otherwise, it just would have been a ridiculously long video and no one would ever have watched it. And it just would have been useless. So we filmed it in the Ask Me Anything format with no kind of like real idea what we were going to do. And then we figured it out later afterwards when we saw the footage. And what it came down to was those 10 secrets. Now, the original video, the kind of Ask Me Anything format, someone have a guess in the room how much you think that cost me to put online for free. 3-week business trip around the world with Tom, just following.
50 grand.
Who said that? How much?
50 grand.
50 grand. Yeah. Which currency? You're not far off. $65,000. How long do you think it took to recoup the money back? As a rough estimate. 4 days. Because as soon as it goes up on YouTube, it gets 50, 100,000 views in a couple of weeks. And it just, bang, you just see everyone coming in to purchase the education. And it was actually if you know the history of the Institute, it was actually the first time I'd done any production where it was nothing to do with trading. So obviously it opens up, to a whole new audience, people who are just interested in finance and finance in their own lives. But obviously from the perspective of a trader. There's lots of other people online that you can, get a perspective from about finance and money from different fields, but this is from a trading perspective. So, we do these things where, we have basic business principles in the Institute where it's like if we're doing a seminar somewhere in the world, the cost of a seminar should equal 1 or 2 sales of the education and no more. But we're public facing. So I could eliminate all the costs and sit on a webinar at home from Singapore and just give you no opportunity ever to come to a live seminar. And lots of people do that. So why don't we do it? Why do we spend tens and tens of thousands, hundreds of thousands of dollars a year on seminars? We do 12 seminars every quarter now because we see it as our duty to be public facing. But stuff like this, the brief was to have it as an Ask Me Anything format, but also to make a timeless classic. So in the year 2065, people will still be watching it because it's relevant. And the reason why it's relevant, unfortunately, in the Western world, is because the Western world, the generation coming up in terms of finance, understanding business, understanding money, has just completely lost its way. And there needs to be resources online that people can go to where they can get the basic principles that underpin money, business, and finance. And then you can go your own way. Everyone has different choices in their life. So we came down to these 10 secrets. And then for the next year or two, I'm just watching the comments come through under the video. And it's amazing, from my perspective, to watch the comments, how people just don't get certain things. And today, what we're going to do is look at the principles that underpin all of those 10 secrets to make it final. So I've only done this once, this presentation in Singapore in November at the World Wealth Creation Conference to about 800 people. And it's pretty much exactly the same presentation. And this is the last time I'm going to do it. So it'll be recorded, it'll go online for a price. And this is what underpins all of those things that you saw in that video. So I'm also answering all the questions from the comment section in this presentation. So what are the 5 principles? This is what we're going to go through today. It should take us a couple of hours. So first, acceptance. 2, self-determination. Freedom, risk IQ, and hierarchy. Let's start with acceptance. So I'm landing from the future, Singapore. I get in a time machine and I come back to the United Kingdom. That's what it feels like to me when I come back to the UK. The UK's struggling, and things I'm going to show you now will be a little bit controversial, but I don't care because I'll get back on a plane and I'll go back to the future. The problem is not mine. The problem is either yourself or where you are. And acceptance underpins these 3 secrets on the video that you saw online. So respecting money, but being indifferent towards it, okay? You remember that conversation where I'm sitting on the sofa in New York? Going traveling, getting perspective, and getting your dream life, and seeking out alternative education. The principle of acceptance is what underpins those 3 things. So, if you remember when I was sitting on that sofa, the basic premise of that interview, and that was very much an off-the-cuff, Anton, we just landed in New York, I'm going to turn the camera on, I'm going to ask you a question about money. And then I went into the bedroom, put a shirt on, and then we sat down, and that was it. And Tom was really worried. He was like, if we just sit there and talk for a really long time, it's going to be really dry and boring. And I don't care. Like, it's not about being punchy and it being over in a minute to keep, lazy and bored people engaged. It's about just getting the real information out there. So if you remember in that interview, the basic premise is that a capitalist system combined with democracy and freedom, although it's not perfect, it's the most effective system in the history of mankind for raising living standards. Proven. Proven by history. No one can tell you any different. So, for example, the US Constitution, Western world rule of law, that has stood the test of time. And it's been proven that it's basically the greatest gift that's ever been given to humanity. And if you think it's not, you have a problem. You've been brainwashed because the facts are there. If you just look at the last 200 years, the numbers are staggering in terms of the percentage of human beings that have been born in the last 200 years relative to the rest of human history. If you think those systems are the problem, you are the problem. That's the basic principle, okay? Combine that with a money-based system and see money as votes. So you get to do whatever you want with it because you have freedom. And you make choices. And that combination has elevated living standards exponentially in the last couple of hundred years. And prior to that, what was the world? It was just run by autocrats, aristocracies, and there was no freedom for the poor. It was a system of servitude and top-down, and power just flowing from the top down. The power now is with the consumer. Because money gives you freedom. You can do what you want with it. And it's a vote. And right now, obviously, in the Western world, it's a very popular kind of political leaning to be anti that system. That's great. But if you don't accept that it's the best system that's ever been created in the history of mankind, and you spend your life fighting it, unfortunately, you're never going to become wealthy. So acceptance is really just accepting it's true. Once you accept it's true, you actually just free yourself to be able to go and do whatever you want. And if you're the typical millennial who wants to change the world, the best way to change the world is get rich and use your money to change it. The system's there for you to do it. No one's fighting you. The vote system basically gives you the power to elect superior goods and services. That's the money system. And if you provide those superior goods and services, you actually raise the level of living standards and humanity yourself and eliminate bad products and bad services. So everyone's life gets better. That's the beauty of the capitalist money system. And if you remember in that interview, it was about barter economies. So money eliminates bartering. So again, acceptance in this principle, in this form, is just admitting that it's true. Like, I don't think it's trendy or cool by any stretch of the imagination to deny that capitalism is great. I think if you don't think that, I think you're dumb. Because the truth is, with, for example, medical and scientific advancements of the last 200 years, and all the innovation that's happened, if it wasn't there, you literally would not have been born. Think in the bigger picture. You literally would not have been born. I think this is a great quote from Milton Friedman. If you don't know who that guy is, very famous economist, dead now, but was pretty much the grandfather of all monetary theory. One of his quotes, "The record of history is absolutely crystal clear that there is no alternative way so far discovered of improving the lot of ordinary people that can hold a candle to the productive activities that are unleashed by a free enterprise system." Anyone disagree with that? I don't believe you. We're in London. 40–50% of people in London are basically left-leaning socialists. So I know you're all in the room. Now, if we are having a beer, which we will be later at the pub, I would be completely admitting to you that it's not perfect. No one is saying it's perfect. No one's saying it's perfect. But it's better than everything else. And you have to start thinking intergenerationally. Not in the next 1 or 2 years, what's going to happen, why capitalism might not be good in the next 1 or 2 years. Think of it over periods of 25, 50, 100 years. When you start thinking intergenerationally and just accept that it works the best way, you can be part of it, and if you want to change the world, be part of it, be successful, and use your resources to make it better. But first, acceptance. You wouldn't even be here. You wouldn't have been born if it didn't exist. So to succeed in this superior system, as proven by history, first of all, you've got to accept it and unbrainwash yourself. Be part of it and work out its advantages and disadvantages and operate successfully within it. Start trying to think in this way. What was global GDP in 2017? 79.2 trillion US dollars. Do you have any comprehension of how big that is? In 2018, it's going to be roughly 81.97 trillion. In 2019, it's going to be 84.84 trillion. And we continue growing. Global GDP. It's been growing 3.5% for the last 6 years. But ask yourself this question. What if it was lower than that number next year? So everyone's expecting this number. What if it was lower? Well, who cares? The numbers are ridiculous. The numbers are just monstrous. And on top of that, if you're just smart and you know how to make money when GDP is expanding and how to make money when GDP is contracting, it doesn't matter. It's genuinely not a question of whether it goes up or down. It's just a question of whether you accept it's the best system. And if you want to participate or not. Guess what? If you make the choice every day not to participate, what do you think you get in return? Nothing. It's a meritocratic system. The real question, when you look at that number there, So 2018, 81.97 trillion. The real question is, how much do you want? If you want nothing, you will get nothing. Now, obviously, some people in the world don't have a choice. But you have the choice. You're lucky. You can choose to be part of it. You can choose how much you want. And when you've got it, you can choose what you want to do with it. And if you want to change the world with it, change the world. By just participating and making a better product or service, you're changing the world anyway. You're raising living standards. You're doing your part in the economy. And once you accept it, what will happen? You're going to engage with the system positively. And you'll figure out the advantages, disadvantages. You'll figure out what works, what doesn't, what it can do for you, and what you can do for it. But if you choose not to participate and stand around with placards with stupid signs on the placards, protesting all the time, that's you saying, I want nothing. And what's the system going to give you in return? Nothing. Because you produce nothing. Is it starting to sink in? So that's one of the controversial parts out of the way. If you want to have a beer and talk about it later, well, 1 or 2 beers, not too many, because you might get into an argument. But that's one of the controversial parts out of the way. And I'm doing this to try and help, by the way. I'm not standing here to try and be nasty to you. This is to help. You know, I struggled quite a bit in my late teens, early 20s. And I wasn't one of these people who wanted to change the world, but I had a bit of a chip on my shoulder because I was from a background with no money, a city that was full of crime and poverty and mayhem. And I left. And then I was around a lot of lucky and wealthy people. And I didn't hate them, but there was a feeling all the time of, why couldn't that have just been me? The moment I dropped that, that's when my life took off. Once you just accept it's a good system, and by the way, if you start with 0 and someone else has got a lot, and maybe they're 3rd generation wealth, you can't hate them. The best thing you can do is just change your own circumstances. Don't worry about other people. Traveling. You remember I was on the plane talking about traveling in the video. Money allows you experiences. And one of the most important is traveling. The quicker you can do it, please do it. Who's a traveling junkie? Who travels a lot? Quite a lot of you. It's quite impressive. Like, I've been pretty much everywhere. And what I realized is that it gives you a lot of perspective on other economies, other systems, and which systems work and which systems don't. Now, it's all very well strapping on a backpack and going through India and all these places and, you know, Africa, 3rd world countries or whatever, and getting these experiences. It's great fun. You know, a lot of people do it when they have a year off. You're not really thinking in that situation about the country you're in. You're just trying to get the experience out of the country yourself. So traveling is actually quite selfish in that respect. You're trying to have a good time. Your time's more important than actually figuring out what's going on here in this country. But you get this perspective. And also, when you come back to your home country, you see things in a very different way. Because you've seen what works and what doesn't. And when you come back to your own country, you start seeing things that don't work and things that work. So going back to the other point, the advantages and disadvantages of this system, you start noticing a lot more. Part of the traveling discussion was buying your dream life for cash. Do you remember that? So if you go around the world and you decide, okay, this is my heaven. This is where I want to be forever. That's the place where you should be buying something for cash. But if you haven't got the cash, obviously you have to wait and figure out how to get that money to buy it. And when you've got that, what does it mean? Well, you can operate with total freedom. Because if you came back to the UK and the UK fell apart, what happens? Well, 99.9% of the population are running around scrambling, trying to sort their lives out. What do? You jump in a car and go to Heathrow. And on the other side of the world, you've got your dream life. So when you're operating in the UK, you have zero risk. So when you walk into a meeting and you're doing a negotiation and someone's haggling over a contract or haggling over a price, you don't care. They care, but you don't, because you've already got your dream life. So you sit there and you can negotiate, but who really cares? You just tell them what you want. And if they don't give it to you, you just walk out the room. And what happens? 9 times out of 10, you get what you want. Because in that meeting, and in life generally, when you're operating in that situation, where you have the dream life, you don't panic. You don't worry. You don't have any anxiety. You don't show your hand of weakness. And the person who's negotiating with you over whatever doesn't pick up on your weakness. And because you're non-negotiable, they cannot negotiate with you. So they have no choice. They just always give in and give you what you want. It gives you a lot of strength. Like, I noticed a massive difference. After I went traveling, I bought 5 properties around the world for cash. And when I came back, because I just didn't care, everything just came to me. I didn't go looking. Everything seemed to just work out all the time. And there wasn't any real discussions over prices or negotiations ever. It was just, that's what I want. If you don't like it, Heathrow Terminal 5. And they always give you what you want, because they have no choice. You'll make much better decisions, and you won't need to take unnecessary, excessive risks. You'll absolutely not ever be required to have a lottery mentality. So where you're just all the time buying lottery tickets in different formats, trying to get huge amounts of upside because you've got nothing, and you're trying to get excessive amounts of money with excessive amounts of risk, looking to play the lottery all the time. You just won't need to. So it's something that you should really aim for, in my opinion, in your life. If you can get your dream life by 35, 40 years old, you're going to do excessively well in your 40s and 50s and 60s. Because at that stage, for the rest of your life, you don't care. You've already won. And what happens is the world comes to you and gives you more. Because you're in a much stronger position than everybody else. And they want what you have. So they take the risk and you don't. So what it comes down to is having this freedom. And it was said in the video, the 10 secrets video, freedom is the #1 asset you will ever own. So back to this principle, acceptance. Acceptance that the system is superior. Why? Because it gives you freedom, if you want it. If you don't want it, fine. The system won't give you freedom if you don't want it. But if you want it, you'll get it. Very important to understand what freedom actually is. We'll define it through this presentation. So traveling, what it comes down to really, if you've never traveled and seen multiple systems that have failed and multiple systems that have succeeded, you really don't truly know and understand the system that you live in, whether it's successful or not. So if you're just sitting in this system thinking it's bad, but you've never traveled, how do you know it's bad? How do you know it's good? You don't have any perspective whatsoever. I would advise, when you meet people, one of the first conversations you should have with people is, how much have they traveled in their life? It will then give you an idea of who you're dealing with, if they're likely to offer anything of value and understanding and perspective on the world. If they haven't, that relationship is going to last a very short time, because they don't understand anything in the world. Seeking out alternative education. So if you remember that interview on the street in the 10 secrets, acceptance here in this form is just accepting that there are some disadvantages in the system. And one of them, and it's very prevalent in the UK, is that government's too big. When government gets too big, they control the narrative. They control the information that gets delivered to you. And they provide inadequate services, especially in education. Like a guy like me can fly over from Singapore and deliver to you in 2 hours what you should be learning in school from the age of 11 to 18. Why is it not there? It's a controlled narrative to make you believe in certain things. Think about how many teachers that you had growing up. Can you name one of your teachers growing up that ran a multi-million-dollar successful company? Of course not. Ask yourself these questions about the teachers that you had when you were growing up. What percentage of your teachers had successful marriages or were divorced? And these people are standing in front of you, impressionable kids of classrooms of 20, 30, 40 kids, telling them how they should live and think. And when, as a parent, you're dropping them off and leaving them with these people for years. Most of these teachers are just failures. And they're teaching you a script called the national curriculum. So you just have to accept that in a lot of Western world democratic capitalist systems, there are issues, there are problems. So like I said almost right at the beginning, the systems are not perfect. And one of the big issues is you're given a narrative script education. And in a lot of countries, it's worse. A lot of countries, the distribution of the way people think is so narrow. It's like they're churning out a conveyor belt of robots. It's like a factory just churning out robots who all think in the same way. So this is, again, acceptance. Now, moving on to the next step, what do you do about it? Well, you've got to seek out alternative education. Parents are also an issue. So if you're third, fourth, fifth, 10th generation, and your parents have 0 in their bank account, so you're third, fourth, fifth, 10th generation Western world, just think how long your family has been operating in the Western world and all the economic booms that have happened over the last 100, 200 years. And they've got 0. Well, it's the same thing as the teacher, right? If they're standing in front of you and telling you what you should be doing with your life, it's a joke. Because they've got nothing. They've lost. So you're not going to take advice in any game from someone who loses every time they play the game. So why would you take advice from them? Back to school teachers. Obviously, the vast majority work in the public sector. But even if you've been to a private school, it's very, very unlikely that any of these people have had a modicum of success anywhere in their life. So in terms of financial education, they can't teach you anything. There is obviously another problem in the Western world of out-of-wedlock children, so the dad's not around, or single-parent families, divorces. You know, it's very high. A lot of these kids have had no example of how to do things. Just the basics. Just the very basics. That's all you need. And school doesn't fill that gap. It doesn't even provide that gap. You know, in a lot of communities in the Western world, and this is the negative, government's too big in a lot of these countries. School's a place where you drop your kids off to hang out for 7, 8 hours because you've got something else you've got to go and work to put something on the table at the end of the day. School just becomes a convenience, somewhere to drop the kids off. So acceptance in this respect is just accepting that that part of the system fails people when it comes to a financial and business education. Because it simply can't provide that type of education because the people in the system have never done it. So either the teacher or the parent. So you have to remove yourself from the situation. Physically. So what did I do? I grew up in Liverpool. I think it's like 90, 95% left wing. Very, very, in the 80s, very, very anti-capitalist, very anti-business. Massive bloated state, lots of welfare, dependency, drugs, crime. You just literally get on a train and you leave. You don't hang around. Don't fight what's around you. It's there, just accept it, get on a train and leave. Physically remove yourself. So just accept that it exists and seek out a better financial education because it's not going to be provided to you. That's one of the failures of the system. Okay, principle number 2, self-determination. So this one probably brought up the most questions in the comments section after the video went out over the last couple of years. Self-determination is the principle that underpins the 2 secrets of rent to own, so defining assets and liabilities properly, and building and owning your own infrastructure. So in terms of financial education, and financial understanding. An asset and a liability, understanding what a perceived asset actually is. So people actually perceive certain things as assets when they're actually liabilities. And even after the video went out, it's unbelievable how many people still don't get it. Because it really is just straight maths. And we use mortgages as the main example, okay? So let's start with a property, I don't know, somewhere down on this road. It's on the market for 3 million quid. If you get a mortgage, do you pay £3 million for that property? No. You pay a hell of a lot more. So I'm going to show you now why financially, why it's actually really dumb to have a mortgage. We can actually quantify, because the first thing that a mortgage takes from you is your freedom, because you have to pay it every month. And of course, I'm going to get onto the point in a second, but if you don't have a mortgage and you pay rent, you have to pay rent every month. Well, you don't. You can just leave. We'll get onto that in a second. So a mortgage takes your freedom. And right from the beginning, before you even sign the paper to take the mortgage, you can sit down and figure out what you value your freedom at that moment for the next 25, 30 years. With just a few assumptions. So let's use an example in the United States. Everyone knows the difference between a repayment and an interest-only mortgage. Do we know that? Most people should. If you don't know the difference between that, you need some help. A repayment mortgage, you're paying down the principal of the loan while you're paying the mortgage. Interest only, you're not. You're just paying the interest. So in the US, it's mostly repayment, vast majority, okay? In the UK now, it's about 50-50, repayments and interest-only mortgages that are outstanding in the economy. But we're going to use an example here, which is the best case scenario, which is a repayment mortgage, okay, in the US. So let's say you find a property that's 500 grand, and you put down a 75 grand deposit to buy the property. So you get a 425 grand mortgage. You sign all the papers, it's done. What do you own? Do you think you own that house? You own nothing. You own, over 30 years, a liability of 360 payments. That's what you own. If you miss one of those payments, the bank takes the property. So I'd like to think of an image of a young couple who have just been married. And the husband carries his new bride over the threshold, and they're clinking glasses of champagne, celebrating. And they think they own their house. They own nothing. They've got a loan and 360 payments. That's what they've got. So let's assume a 3.75% interest rate. Over, I think this is 30 years, 360 months, right? So that's monthly payments of $1,968, okay? For 30 years. So over the full life of the mortgage, they're not paying $500,000 for the property. They're paying $708,000. But let's make an assumption. You know, the Western world assumption is that property just goes up forever. So let's put that assumption in and say, okay, after 30 years, the property is going to be worth $1 million. Have you done well in that situation? Do you think you've done well in that situation? So you've paid, over the 30 years, $708,000. Property's worth $1 million. So you make a net 291 grand over 30 years. But you gave up your freedom in the process the whole time. So you obviously made money, that's undeniable. but you gave up your freedom in the process, okay? You were rewarded for giving up your freedom. But, and this is something that genuinely people don't understand, because the questions that come through, and also I'll prove to you about taking on the mortgage to rent out, is that an asset or a liability? I'll prove that's not true in a second. But people just don't really get opportunity cost of capital, because that 75 grand that you put down to buy the property as a deposit, okay? If you just compounded that at 10% per annum, doing something else, let's say you just invested it in something, you put it in a box, and it made 10% every year. It compounds to 1.3 million over 30 years at 10%. So you have one situation where you're rewarded for giving up your freedom, but the whole time you have no freedom. For 30 years, you have to make that payment every month because you don't own anything. You don't own it till the last payment of the 360 months. So you got that one situation, and you make, if it's worth $1 million, 291 grand. Or you stick it in a box and make 10%, and you make 1.3 million. That's the second situation. There's opportunity cost of capital. So if you believe that you can actually make 10% per year on your money and live within your means, so obviously you don't go out and spend it all or even spend even more, then the 500 grand property would have to increase in value by 1.3 million to pay for the opportunity cost of not putting it in the box that pays 10%. So it would have to increase by that value, the 1.3 million, so it would have to be worth, at the end of 30 years, 1.8 million to pay for the freedom that you obtain by not having the mortgage. Does that make sense? So you can make one choice, you can have the mortgage. You can tie up the 75 grand. So it's now there, tied up, and there's nothing you can do about it. Or you can put it in a box and make 10% per year. And it compounds. So the property would have to work by that much for you to basically not give up your freedom. As a minimum. Well, you've got to live somewhere. So let's assume you rent over the 30 years for 20 grand a year. So you live well within your means. You would have spent 600 grand on rent. So you'd be left with 708 grand if you use that second situation and rented, right? So when you compare the two scenarios, you're richer over 30 years by the 708 grand, even when you're renting. And you have your freedom 100% of the time. And so you have no liabilities and no debt to service. So basically, when you're taking the mortgage, what you're actually saying is, I'm willing to forego my freedom on day one for a price of 208 grand. And you know going into it that you have 0% freedom over the 30 years because you have to make those monthly payments consecutively. And at the end of the 30 years, you can actually look back and say, well, what was my reward every year for 30 years? 9 grand, 9,700. If the property is worth $1 million. So if you want to be smart about this, go and do a spreadsheet and work out all of your break-evens and opportunity cost of capital and time and freedom. Maybe we'll make a spreadsheet like that and send it out one day. So in this scenario, if you believe you can make 10%, and by the way, 10% is easy. If you've got a financial education and you know what you're doing, 10% is easy. There's so many products in the world that pay 10% for very little risk. That to me is like an ultra-conservative investment. So if you believe you can make 10% on your deposit, okay, and you decide to take the mortgage on the $500,000 property, you're basically speculating that the property will increase in value by 1.8 million over the 30 years. That's the assumption you're making. Now, property speculation has worked well in the Western world in the last couple of generations. Why? Because the population's been growing. But now there's a major issue. Birth rates in the West are plummeting. So think about it. If your country's birth rate is 2 children per family or just above, the population remains the same over 2 generations. If it's 1, it halves. The population halves. Do you get that? The buildings will still be there, but there's half the amount of people. So all these people that think they're going to be, renting out properties for the next 50 years and just sitting on a beach somewhere with their feet up drinking Mai Tais while they make this thing they call passive income. I'm trying to think where they actually get this assumption from. Because you need people to rent your properties. If the population's half, you're just going to be one of those people that ends up with a load of properties that are empty and a shitload of mortgage debt. And it is in the process of halving, literally right now. So it's a massive headwind for GDP growth and property prices in these countries. Do you think it's an accident that what you're seeing in the mainstream media over the last couple of years is basically a massive PR campaign by Western world governments to open the doors to unfettered immigration? Why was this not happening 20 years ago? Why now? Because they know it's coming. I'm not going to get too political, but the EU, the birth rate's very low. And the UK, if they screw up Brexit, in my opinion, it's the last opportunity that the UK has to sort itself out. If they don't use that as a big opportunity to sort themselves out, it's over. Because when you look at it intergenerationally, things need to happen now in the next 10, 20 years. And the demographic headwind is a major issue for the Western world and Europe and the UK. The UK is in competition with all these countries, and you need bodies. You need babies, and you need people coming in. But the right people who are going to add to the economy and create resources and businesses and GDP and jobs. If you don't, it's game over. It will happen in our lifetime if you don't do it. So going back to the mortgages, this pretty much debunks the whole idea that, it's really easy to just pop down to the bank, prove your income or do a self-certified mortgage, get a buy-to-let, and just rent it out to some random. You are now long that mortgage. You don't own the property. The mortgage is a liability. The renter is a liability. You're working for the bank, not for yourself. And you're going to have to work on that property for 30 years. That does, these numbers don't even assume that you've got all your costs and that you actually have to work. You're not going to be sitting on a beach just collecting rental income. Have we got any landlords here? I'm sure we have. When was the last time you didn't work on a property for a year? You're always on the phone. You're always talking shit to lawyers and accountants and real estate agents, and you're always working. You never stop. It's not passive income. That's a lie. Passive is when you sit on your ass, do nothing, and money just comes to you. It's not passive income. If you want genuine passive income in real estate, has anybody ever invested in real estate investment trusts? I have. I do it all the time. Who else is in REITs? You've got REITs? So real estate investment trust is an asset class which was invented around the 60s in the United States. And there was a bit of an explosion of this asset class in the 80s in the US. And it's been exported everywhere. You can buy real estate investment trusts in America, Canada, UK, all of Europe, Singapore, Hong Kong, Australia, New Zealand. There's literally there's thousands of them. And what are they? What are they? Well, there's all different types, but the basic premise is you either own or manage real estate, and it's wrapped up in a structure called a REIT, okay? And they're publicly listed. You can trade them on the stock exchange. So you can go out right now and buy one, okay? And one of the types is a residential REIT, a residential portfolio manager or owner, okay? Whatever that company makes, they don't pay tax on it if they're a registered REIT, okay? But there's a catch. They have to pay 90% of the rental income to their investors by law. So, you don't need to own bricks and mortar to be a landlord and make money out of property. You can buy a REIT and just get an annual dividend and do nothing. If you want to sit on a beach and get passive income, buy a residential real estate investment trust that pays a 6 to 9% dividend per year. The landlord by law has to pay you 90% of the rental income that they collect. What do? They work. What have you done? You've provided the capital, and what are you doing? You're sitting on your ass on the beach drinking Mai Tais. They manage everything. So there's always opportunity cost. And also, by the way, if the property market does happen to go up in value, the portfolio of the REIT goes up in value, and the share price of the REIT goes up. So you're long the stock, you're an investor. So if the property portfolio doubles in value, the REIT is going to double in value. So you don't miss any of the upside by not buying bricks and mortar. You can participate in the upside as well. But you genuinely do nothing. So I'd encourage you to look at REITs and start looking at the opportunity cost of actually owning something in bricks and mortar. Well, actually you don't. Come on, you've got a mortgage, right? You've got to pay 30 years. I'm saying taking the mortgage and then renting it out and having the renter and having all the nonsense that you have to deal with all the time. It's a liability. It's not an asset. You're not earning passive income. If you make money, it's because you've worked for the property for 30 years. And you could have been doing something else. It's all about opportunity cost. So also bear in mind, this example that I've just given is a repayment example. This is the best case scenario. This assumes that you're actually paying down the principal of the debt. 50% of mortgages now in the West are interest only. So people are taking out the debt and just servicing the debt by paying the interest and never ever paying down the principal. It's madness. And think of the interest rates as well. So the example that we've used here was 3.75%. Do you control that? You've got no control over it whatsoever. Your entire financial future rests on the whims of a central bank. So if you're on a fixed mortgage for, say, 3 or 4 years, and you come off that fixed number and interest rates are higher, you're paying a higher mortgage. And you didn't choose to do that, someone else did. So you don't have any self-determination in that situation. So again, going right back to the beginning, the system's not perfect. You just need to know the advantages and disadvantages. So if you want to own property, we operate in a system where you are allowed to own property if you want to. But there's various ways you can do it. So you can buy for cash, you can take a mortgage, you can decide, actually, you know what, I don't want to participate. I just want to invest the capital and buy a REIT, let the landlord worry about it. There's many, many different ways of doing it. Doing it with a mortgage is the worst way. It's just the worst way. We've also not mentioned here the intangible benefits that you get from just having total freedom, because it's also freedom of thought. We'll come on to that a bit later with risk, being able to assess risk properly. Because if you don't have total freedom, you can't assess risk objectively. So most people just don't understand this basic stuff about opportunity cost and the options that they have in the world, that they have in terms of what they can do with their money. So if you just make some basic assumptions like, well, here's my deposit. If I just grew that at 10% per year, what's my opportunity cost? What do I value my freedom at right now if I take this mortgage? What's my payoff if the property's worth this, 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 and this? And what's my risk? What country am I in? Am I in a country that has a birth rate of 1? Okay? I'm in a country that has a birth rate of 1, 1.2. Well, that means the population's going down 40 to 50% in the next 30, 40 years. Because the previous generation just dies, and then what are you left with? A whole bunch of houses and half the people. So you've got to assess your risk properly. So most people just can't see it, and there's obviously a massive conflict of interest. It's basically the debt market narrative, okay? Everyone in this room is sold debt through various media channels as a solution to their problems. It's not a solution to your problem. It's a conflict of interest that they want you to believe that debt is the solution. So this myth that you take a mortgage and you own a property is continually pushed and perpetuated until it brainwashes people into thinking that they actually own a property. And that just becomes accepted as truth, that if you take a mortgage, you own a property. It's obviously not true. You own nothing. So renting to own, very, very important for the principle of self-determination, okay? I would encourage everybody in your early years of life, rent first. Just totally maintain your freedom and buy for cash later, much further down the line, your dream life. Continue to maintain your freedom. In terms of self-determination, true self-determination means you are totally in control of your finances, not somebody else. So not a bank. A bank doesn't decide your financial future. Your bank manager doesn't decide your financial future. A central bank doesn't decide your financial future. A government doesn't decide your financial future. Just don't have mortgages. It's the worst way to buy property. It's the worst way. Or the worst way to get exposure to owning property. And all the problems that bricks and mortar bring with it. It's a liability. You don't have to worry about it. Let the landlord worry about it. So pensions, building your own infrastructure. This is also a very important part of the 10 Secrets video. And again, underpinned by self-determination. So we discussed like building your own pension pot, okay? So having that box that will pay you an annuity forever. What's everybody been doing in the Western world for the last 40 or 40, 50 years? What's everyone been doing with their pensions? Well, how people have generally retired in the last 40, 50 years, they've built a pension pot where they save every month if they've been well behaved. But they've also used property as a speculative asset to try and make enough money so they can retire and live a good retirement. Pensions. People don't save enough, and people live well beyond their means. But even if they live within their means and save enough, they're outsourcing their pension to somebody else. And when you look at the returns of a generic passive pension over the last 30, 40 years, it's pathetic. So what tends to happen? Markets, stock markets go up, say 15% a year. So let's say you got an index of 100 and you started at the point of 100 and you got 15% a year compounded. What do you end up with after 5 years? 200. That's the level of the index. Your money doubles. But what happens in year 6 if the market goes down 50%? Well, you're back at 100. What happens if you're the person that gets 15% a year compounded, your 100 goes to 200, and then when the stock market goes down 50%, you make 50%. What are you at then? You're at 300. They're your two choices for your pension. Outsourcing and insourcing. If you outsource, you'll be back at 100 before you know it. If you insource, you have a chance at being at 300. That's what it's come down to in the last 35, 45 years. So people that just have these things called long-only pensions, all you do is put money in every month and buy the market. They're the people that go up and then they go back to 100 every cycle. And they don't save enough. So what have they done? Well, they've just made all the wrong choices. This is the parents and the teachers that we all know and love, who are trying to give you financial advice and life advice on what to do. They're the people who have done that in the last 35, 45 years. Like, people just don't learn how to invest properly themselves. They've basically outsourced their pension to a third party. So what did they not do? They didn't invest in themselves and build their own infrastructure. So this is another thing in the Western world that's in the capitalist system provided by public authorities as an infrastructure, as a solution to your problems. And it's a disadvantage. It hasn't worked. If it worked, then everyone would be retiring very wealthy and having very comfortable lives. But what does everyone do in the Western world when they retire? They have to sell their property, downgrade to a smaller property to release cash, release equity, and pay off the mortgage. And then that's not enough, and then their kids have to top up their income. So you want to be the opposite of that. You want to be getting to retirement and going from your 4-bedroom house when you're 60 to buying a mansion because you're now retired and you can afford to buy a mansion. You don't go from your 4-bedroom property and downgrade to a 1-bedroom flat. But you don't know where the world's going to be when you retire. If you're 25, 35 now, why are you assuming that if you're in a problem, you're going to get some sort of support from the government in the future? What if it just disappears? Again, this is back to self-determination. You are totally at the whim of public authorities. And if they disappear and all the money disappears, all the welfare disappears, what are you going to be doing if you're short in your pension and you can't even live a basic standard of living? Like, you can't rely on these people. You can only rely on yourself. So, building your own infrastructure, for you to get significant investments and savings. Of course, you can make money working for other people and corporations or whatever. But if you want explosive, significant money, you've got to build your own infrastructure and build your own businesses. And you reinvest the profits into investments that generate that return every year, the 10% plus return. And then it just compounds. And you'll realize when you get to certain levels, it starts off shallow, it gets a little bit steeper, and it takes time, and then it just goes exponential. So it takes time. So you just got to understand the numbers behind the compounding. And you'll get there quicker as well, obviously, if you work for yourself and you're successful in the business that you choose to be in. Also, don't just assume, and this goes back to traveling as well, don't just assume that where you live in terms of taxes is efficient. I'll give you an example of a comparison between the United Kingdom and Singapore. So I live in Singapore, and I used to live in the UK. I've got businesses all over the world, and I chose to move to Singapore. Not just because of tax reasons. I pay tax in Singapore. I could have set up somewhere where there's zero tax. There's plenty of countries that offer zero tax. You can go to Dubai, register a business in the Dubai International Financial Center, the DIFC, put all your sales, all your revenue, all your profit through your Dubai company, and pay zero for 50 years. Now that's fine if you don't want to live there. If you actually want to live there, the important thing is, what deal do you get in return for the tax that you pay? Well, if you pay nothing in these countries around the world, what you find is, in return, you do get nothing. So go to any of the Caribbean islands where you can set up companies and pay 0% tax. What do you get? Dirt roads, no schools, no hospitals, just crap public services. You can't live there. They're just tax havens, right? So it's different if you actually want to move there, okay? So I think Singapore is the best place in the world because it's the best deal in the world in terms of tax-efficient structures and lifestyle. So let's say you have a service company and you work for yourself. And you have a UK company and a Singapore company. And you invoice a client 100. In the UK, what ends up in your pocket if you have a gross margin business of 50%. If you're the entrepreneur, what ends up in your pocket out of 100 with a 50% gross margin business? Anyone have a guess?
20.
Who said 55? You've obviously not ever worked for yourself in the UK.
25 to 30.
Who's self-employed in the UK? What do you think you get? 40?
40 from 100.
No, nowhere near.
So
Try 12. Because what's happening, you invoice 100, right? Your VAT is 20%. Sales tax. If you're on a 50% gross margin business, you claim 10 back. So you're left with 90. Okay? Then you're 45 because your gross margin is 50%. Then you pay your corporation tax 20. So what are you left with? 36. You leave 10% in the business. You can't take out all that 36. If you have a bad 1 or 2 months in the next quarter, you need to have working capital in your business at all time, right? So you leave in 10 all the time. So you're left with 25, 26. Then you pay yourself. Now let's say you're a higher rate taxpayer. You've got a very successful business. What's the highest rate of income tax in the UK?
45.
How much?
45%.
45. Is it 45 now?
Yeah.
What's national insurance? 13. I thought it was 11.
It's
12. Okay. I don't know. I've not been here for a while, but it's not gone down, right? And by the way, one of the costs of the business in the UK is that you actually have to pay employers' national insurance. So whoever you hire, you add it on, you have to write a check. It's a tax on jobs. It's crazy. So you're left with your 25, 26. You're a high rate taxpayer, 45% tax plus 12% national insurance. So you're at 57. You're left with 12, 13. Now that is a fucking good business. That's a 50% gross margin successful company with a product or service that sells. And the owner is in the higher income tax bracket because they're earning a few £100,000 a year or whatever, right? What if you're just a regular company on the high street, like a flower shop or a hairdresser's or a nail bar or whatever you go when you walk down the high street? For you to make like 100 grand a year after tax, you're going to have to turn over millions and millions of pounds. It's a joke. It's an absolute joke. So let's have a look at the other option, Singapore. You take exactly the same company and just put all the revenue and profit through Singapore. What do you keep in Singapore out of 100? What do you reckon? It's a 50% gross margin business, right? So it has to be lower than 50. Right? What do you think it is? It's low 40s. So essentially what's happening is if you run exactly the same company through Singapore versus the UK, 40 years of work in the UK is equivalent to 10 years work in Singapore. So you can have 4 careers in Singapore, and that equals 1 career in the UK. Now, when I was living here, it just became too much because you just get up every morning and you realize that you work from January the 1st every year till the end of October, paying for everyone else to live. That's basically what you do. And that's if you're successful. So if you don't want capital here, that's fine. Make it difficult for people like me. What do? Well, we don't care. We've got money. We just go to Heathrow. It doesn't hurt me because I just leave. The people it really hurts are the middle class, are the working class. That's who it really hurts, because it hollows out the productive capacity of the economy, and capital leaves. So, factoring 1 to 4, UK versus Singapore, running exactly the same company. And this is what the UK doesn't realize. The UK doesn't compete anymore just on business. It also competes on lifestyle. So if you've got money, you can move anywhere in the world, right? First of all, why would you be in the UK and run your company from the UK? It's just dumb. It's just really dumb. But on top of that, you have to live for 7 months in darkness and freezing cold shit weather. So you spend your year in the dark, in the cold, paying for everybody else to live. And this is what the UK doesn't realize. And this is why I say Brexit is like probably the last opportunity for you guys to sort yourself out. Because people don't realize that in this global economy, if you're not competitive, you die. And the UK is not just uncompetitive on taxes and attracting capital into the country and attracting entrepreneurs. It used to be, but it's not any longer. It doesn't compete on lifestyle. It's a crap place to live if you've got money. And there's nothing you can do about it. You know, for example, like if you live the best lifestyle, say in West London, right? And you're a billionaire. And you come downstairs and you get in your roller and you've got your driver. Well, unless you've got wings, you're not avoiding the traffic. Like there's certain thing on the weather, there's no amount of money that can buy you out of that crap, right? You're still going to have to experience what everybody else experiences. But everywhere, there's so many places in the world, and Singapore is just one of them, where if you've got the capital and you want the lifestyle, the UK can't compete with it. That's why there's so much money there. Does anyone know what the balance sheet of Singapore is as a country? Like the assets that the government holds. $1 trillion of assets. And the population's 5.5 million. They produce nothing. They have no agriculture. They have no commodities. They produce nothing. $1 trillion and 5.5 million population. I mean, this is what you really have to understand. Like, there's a big world out there, and you are getting a shit deal. Very shit deal. If you are self-employed and you want to chat about doing something, I've been through the whole process. I can discuss it with you. So I know what the Singapore government likes in terms of the profile of your business and what revenue and profit and tax you need to pay over a couple of years, where they look at you favorably and say, yeah, we like you, move, come into the country. If you want to talk about that later, we can. So building your own infrastructure, tax-efficient structures. There's nothing negative about wanting to pay less tax. I've never understood it. There's nothing moral about, and it's called effective tax rates, okay? Where you add up all taxes and say, what do I really pay? What actually goes into my pocket? When you have an effective tax rate for an entrepreneur that runs a successful 50% gross margin business of 88%, capital is going to leave your country. And it's been going on for years. It's just going to go somewhere else where capital gets a better return. And the rich don't suffer. The rich just move. The people who suffer are the middle class and the working class. Okay, let's move on to freedom. Freedom, what does that underpin? So these two secrets from the video. Learning to value your time properly and ditching the smartphone. So you remember I was on the bridge, London Bridge, just staring at these humans walking like zombies into the office and walking back. And the reality is, we've been through the mortgage example, whatever. They think they're squirreling away money and saving and putting it into an asset. But what they're actually doing is they're swapping their time for nothing in return. That's what they're doing. Because when they put their card in the ATM at the end of the month, the day before payday, it says 0. And they look back and they say, well, how many hours did I work last month? I don't know, it could be 200 hours, whatever. But you've worked 200 hours for nothing. So valuing your time is a central tenet of freedom. You need to learn how to value your time properly. If you work for a corporate or someone else, the reality is that you are not valuing your time yourself. Someone else is. It's the labor market that is valuing your time. And it's what they're willing to pay for your work. So you're not in control of it. Now that doesn't mean you can't become wealthy. One of the things I laugh at all the time when I see the comments, people will say, well, didn't he do that? Didn't he used to work in the city? He's telling people to do what, to not